Welcome to Passport to Wealth. I'm your host, Arielle Tucker, certified financial planner and fellow U.S. expat. On this show, we bring together cross-border experts and global Americans to help you make confident decisions about your life, your money, and your next move abroad. Let's get started. Welcome back to Passport to Wealth. I'm your host, Arielle Tucker, a certified financial planner and IRS enrolled agent. Today, we are joined by Aditi Kapadia, the founder of Wealth IQ and a cross-border financial planner who specializes in helping globally mobile professionals navigate the complex financial and tax systems of the United States and Canada. Aditi brings not only technical expertise, but also deep personal expertise to her work. She first moved to the U.S. as an expat while continuing to be paid in Canadian dollars and maintaining Canadian residency, and later made a permanent move to the U.S. in 2016, where she had to learn an entire new financial and tax system from the ground up. I can relate to that. I can totally relate to having to learn an entire system. That lived experience shapes Aditi's practical, plain English approach to financial planning, especially for clients managing cross-border income, investments, and major life transitions. Her work focuses on clarity, confidence, and helping clients make smart financial decisions no matter which side of the border they're on. Aditi, welcome back to Passport to Wealth.
Thank you for having me. I'm excited to be here.
Okay, so let's go back to the beginning. You are Canadian, right?
Yes, I am a dual citizen of Canada and the US now, but I was born and raised, I was born in the Middle East, in Saudi Arabia. I immigrated to Toronto with my family when I was in high school. And then as soon as I was done with college, I joined General Electric. And GE at the time was one of the largest companies. They had so many different divisions that I was lucky to be in their finance training programs. And that's really what brought me to the US. So 2 years into my career at GE in Canada, they transferred me into I moved to Connecticut. At that time, I moved on what we call an L1 visa. So it's a visa that allows intercompany transfers into the US. Like you said, I maintained my residency in Canada. I got paid in Canadian dollars, and I, had the opportunity to travel the world with GE for a few years, which was fantastic because I got to live in Europe, I got to live in Mexico, and of course the US, and just see so many different business from a finance point of view. And that really shaped the rest of my career.
Now, what was the the US dollar to the Canadian dollar when you first made that transition? Like, was that a huge impact for you? I know right now the US dollar is so much stronger than the Canadian dollar, but I remember when I was little, because I grew up in New York, but on the other side, right? We were only a couple hours away from Toronto. We would go up to Canada all the time. I lived an hour from Niagara Falls. So it'd be like, go hang out with your friends in Niagara Falls. And it used to be that it was like almost, parity. So what
Yeah,
was it when you moved?
it was 92 cents. So one Canadian dollar was 92 US cents when I first moved. Then when I moved back to Canada, so I did a 5-year stint outside of Canada. I moved back. At that time, it was almost at parity. So in 2009, 10, it was at parity. And then again, now one Canadian dollar is almost like 70 cents in the
Yeah.
US. The exchange rate has moved a lot. And that is a big part of financial planning too, is keeping an eye on how these rates have moved, because it's hit a lot of Canadians who have assets in the US or travel to the US. A lot of the snowbirds that
Mhm.
go every year to Florida and spend the winters there. But
Yeah,
yeah,
your trip just got 30% more expensive.
exactly. And it's been this way for a few years. I think the only reason parity happened for a little bit is because oil prices were so high and Canada was extracting all this oil. So that helped it made the Canadian dollar stronger.
Yeah. No, I know as cross-border financial planners, it's one of those things that we're constantly thinking about, right? It's so important to think, where are your assets? What currency are those assets denominated in? And what currency are you retiring in? And sometimes those are completely different currencies or multiple currencies, and that can get really complex. Okay, let's keep staying back, because I know we have so much to talk about, and I get so excited that I keep jumping around. But I want to go back to that transition when you first kind of decided to make a more permanent move to the US.
Yeah.
And you described that move as feeling really kind of deceptively easy at first because the US and Canada seem so familiar. So when did you realize that the closeness actually made that transition for you hard?
Yeah, so I moved to Chicago the second time that I moved to the US. And Chicago is a 1 hour flight from Toronto. There is 30 flights a day. You can literally decide I want to fly within the next hour and there is a flight available. So it was super easy to move. I didn't even pack all my things when I first moved. I just took a few things. My husband wanted, you know, his job is the one that triggered our move back to the US. And we had an apartment, we packed up, we moved, and I just kept flying back to Toronto. I didn't change anything for the first little bit. And then the constant back and forth and I think I realized at some point that I can't keep doing this. I think I just defaulted back to expat life, which is what I lived the first time I'd moved to the US. And then I realized this was not going to cut it in the long term. So a couple of years later, I finally decided to wrap up all of my affairs in Canada. But this is, we'll dive into this because this was one of the mistakes I had made. And I wish I had made a cleaner exit as opposed to leaving a bunch of things behind to clean up after. But it was just exhausting to go back and forth and have to transfer money. And have multiple bank accounts still that existed in Canada that I was managing. My brokerage accounts and RSPs were still in Canada. So I brought it on myself, and I would not recommend it to clients anymore that are considering a move from Canada to the US.
I think you make a really good point because you did live the expat life for a while. And when you are an expat, you know that that is going to be a certain or specific amount of time, right? That's what an expat is, right? That's the difference between an expat and an immigrant. An expat it's a set period of time, generally up to 5 years, and then you are returning to your home country. And so and you have some kind of protections a little bit from your company and also just like logistically that you don't have to close up shop on your entire financial life and move it to another country versus it sounds like the second time your husband kind of like led that move and you're still trying to like live at your life that you've kind of created. And so I can understand why that would be like a common mistake, right? Like how long is this really going to be for? Are we really going to be happy in the US? Like, yeah, I think it
Yeah,
makes I can understand why, even though like on paper, maybe we haven't optimized everything, but that's just how life happens, right?
exactly. That's so true. Even my job was so easy. I called GE and I said, I want to move to Chicago. And it took 2 days, 3 days, maybe like to transfer my role over. However, there were some things that were hard, logistically. I think the bank account opening process, I think I lost my mind when we walked into a Chase, we opened a bank account, and I just didn't have enough history to open a bank account. And I was like, yeah, that's why I'm
Like a
opening.
savings or checking account, they didn't.
Yeah. Yeah. I had to get my husband to co-sign on my account because he'd been living in Chicago for over a decade. So he had enough history. So we had to open an account together. He had to show up with me. I couldn't open one on my own. A credit card. I thought it was a joke in the beginning when they were like, you're approved for $300. I was like, what? And then they even recommended getting a prepaid card before I was given the $300 limit. So that took a bit of time. I think I was fortunate in that my husband had enough history that he was just able to add me to a lot of his accounts and a lot of his credit cards. So I didn't really have to use my $300 credit card and live with it. But it was what I needed to do to build up history in the US. And I've learned over time, it's that 5 year period that they really want to see that you've had a bank account for 5 years. Like that's when you start to build credit history in the US. It's a slow process.
Credit history is so important. Like everything in the US is dependent on your credit history. And as an American, like I'm so aware of that. Like I remember like having conversations. Do we open, do I become an authorized user on my parents' credit card, in high school or I'm getting my first credit cards at 18 and right. And so it's such a big deal in the US. It's like that number is so important and determines like your entire like financial life in the US. Is it similar in Canada? I mean, it's nothing like that in Europe. So I'm curious, like, what do you do in
Mhm.
Canada?
No, it is. It's very similar in
Okay.
Canada. I just didn't experience it because I had my first bank account open when I was 16 years old in Canada. I had a credit card when I was in college. So I never went through this process of having to build it from scratch so quickly. Because when I moved the second time around, I was moving as an experienced professional. I was making good money. I had expenses and I could not cover off all those expenses in using the credit card that was originally offered to me at $300. Then I had, when I moved to Chicago, we've had this little community of people. There were all these Canadians that had relocated to Chicago, and we all would joke about the same thing. So it was nice to have a community that experienced similar bureaucracies as we moved to a new place.
It's important to be able to laugh at it because there is bureaucracy everywhere. And it's also why when you're moving abroad, like you just have to have more cash. Like you have to have a much bigger cushion. Because even us here, when we first moved, I had a good job, my husband had a good job, and they were still like, your credit card limit is 500 francs a month, right? About $500. And you have to pay that off every month. Like it's not it, like was acted more almost like a debit card than a credit card. And we were like, what? Coming from the US where you'd had like 20, 30, $40,000 in credit limit. It's like, this is crazy. No one is using credit in the same way. There's no points. It's a completely different system, even though it's a credit card.
Yeah.
Do you think credit scores and is that one of the biggest misconceptions that Canadians kind of have about how maybe things will be easy when they plug into the US financial system?
There's a couple more things. There's your financial life, which is, a bit of a starter. You're starting over. For me, I thought the biggest challenge was navigating healthcare and health insurance.
Mm,
The systems are so different between Canada and the US. In Canada, health expenses are paid for by the government. And that's why we have there's higher taxes in Canada. But you walk out with from the doctor's office, you show your health card, you're done. In the US, what surprised me in the beginning was I would go to a doctor's visit and then I would get a few different bills from the same doctor's visit because there's different providers within the same office. There's copays, deductibles, out-of-pocket taxes. These things didn't exist for me. So I had to learn that healthcare system from scratch, which was, I think, harder than the financial system for me. Maybe
I,
because
com-
I had a
I completely agree with that. I mean, we moved back to New York for a couple of years. And it was when we, in our early 30s, and we hadn't really had to deal with US healthcare as like adults yet before. And I was shocked at how difficult it was and how frustrating it was and how much time I would have to spend on the phone, basically advocating for myself or advocating for my insurance to like bill correct or like the doctors wasn't billing correctly. Like I had to like it was like I don't know what is it, A Beautiful Mind where he like lays everything out and there's like the lines connected. I mean, I felt like a crazy person trying to keep everything organized with two working adults and two children. It was a full-time job to manage US healthcare. And I think it's important because at this point you're working for GE, right? So you have good health like my husband worked at GE, so I know they have like a pretty good health plan.
right.
Like you're kind of already coming in at like a higher tier than someone who's
Yeah, it's a great health plan. I'm now on my husband's health plan, very similar. It's amazing when you're working with a company and you're moving over as as an employee that's well paid. You're on a good health insurance, but even still, you still have deductibles, out of pocket maxes, and like
Mhm.
understanding in network, outside of network. That was so new to me. I remember thinking, wait, so some doctors can only bill to certain insurance companies? Like now that all feels normal, but in the beginning, yeah, it was all brand new and a lot to figure out.
Yeah, no, I agree. It's like one of the things that I'm so thankful for with our life outside of the US is that I don't have to deal with like the insurance nearly as much as we did when when we used to live there. So good for you for figuring that out. I want to shift now to make sure we cover this. You're kind of laid out some landmines. So let's shift into what you call the high efficiency, low cost mistakes that people don't realize are costing them the most. So the first landmine that you talk about is leaving finances as is. So talk to us about, what happens when people are leaving their accounts untouched after moving, especially, and we've talked about PFICs on this podcast so many times, but, thinking about different foreign, and when I say foreign, I mean non-US investments or even estate planning gaps.
Yeah. You know what? When people move across the border, I feel like the simplest or some of the biggest mistakes they make are they're not complicated tax strategies, but they're really simple things that, one is just not consolidating all of your accounts and moving that is. This is a personal mistake that I made, and I wish I had simplified my financial life in Canada more before I moved to the US. Consolidating bank accounts, retirement accounts, simplicity is really an asset when you're moving abroad.
Hmm.
And then related to PFIC, when you hold, so for example, you have Canadian brokerage accounts and you're holding ETFs or mutual funds in those Canadian brokerage accounts, it's most likely that those are Canadian domiciled ETFs and automatically become subject to PFIC rules. Now, honestly, PFIC took me a long time to understand too, because it's complicated in the way that it's described and the way that it's understood and also interpreted. If I were to simplify it, it just adds to your compliance headache. You have extra forms to fill out when you report your holdings to the IRS. The treatment on when you buy or sell or get distributions or dividends from your holdings is not subject to good tax treatment. You don't get the benefits of holding those same assets domestically when you move to the US. So you want to pay attention to that to make sure that you don't leave behind brokerage accounts with a whole bunch of Canadian domiciled ETFs and mutual funds before you leave. With estate planning, the rules are so different. In Canada, you're taxed, it's a deemed disposition at death. So they essentially tax you out of your estate at death. And then there's no transfer tax, so to speak. But in the US, we have a transfer tax. So it's good to understand the differences before you move if you're sitting on a lot of assets in Canada, just to make sure that you have some kind of planning done around your will or your trust is going to try to be more holistic with your assets across the border. That part really depends on how much wealth you have. So I would keep it very practical and say if your wealth is above a certain level, you want to work with somebody to say, is it worth it for me to
What's
hold?
that level, Aditi? What's that level?
I would say maybe over $1 million is when you want to, or real estate. So if you're holding real estate in Canada, which can get, property prices have appreciated a lot in Canada. Maybe even I won't even, $1 million, I don't think is worth it with all the headache. I would even increase that to 5 million bucks. It might be worth it to sell all your brokerage accounts and just move them with you to the US.
Are you going to pay Canadian capital gains tax though when you sell everything? If you go to liquidate everything?
Yeah. So when you exit the US, you have to do this departure process anyway, where you fair value all your assets at
Like
that
the
point.
exit tax from the US. Yeah.
So you're gonna do that anyway. So you might as well sell it and just move it to the US and invest it in your US brokerage accounts. Plus, I
But what
think
is the tax rate in Canada when you sell?
the capital gains rate.
Yeah.
It's about 30%. It's similar to the US. It depends on whether you're holding it short term or long term. So the tax rates are not very different. They're higher in Canada. But you're paying that anyway when you exit, when you do your deemed disposition. So you might as well sell out of your assets and hold them in the US. Or you can work with some investment firms that allow you to hold US based brokerage accounts. So you can transfer to those if you don't want to move the money physically too.
Yeah, because I've also seen that. And I just want to point that out because, like, if you have individual holdings, you will likely be able to transfer those into a US brokerage account rather easily without having to, sell everything. If Canadian capital gains tax is like 30%, I would be thinking maybe we could pay, 23.8%, which is like the US. But you're right, it depends on what state you go to. If you go to a
Yeah.
state that also has additional capital gains tax, then you may end up paying almost 30%. So it really won't matter. The other thing is that I wanted to just circle back on is you're talking about, call a professional when you have 1 million or 5 million. The issue that I see in cross border is you can have not a lot of money and have a really complex case. And so
Yeah.
for me, I think about there's like kind of almost like two tests. So I think about, do you have enough assets where it makes like, I know I'm going to add enough value to your situation? Or do you have enough complexity where I know I'm going to add value to your situation? And that's really how I determine if we should work with someone. Because if you're self-employed, that's complex. Even if you don't make a lot of money, that's still a complexity that you really have to think through.
Yeah.
If you are involved in any, foreign corporations in Canada or in the US, that's something to think through. If you have complex family situations, maybe part of the family is staying back, that's something to think through. If you, like you said, if you own real estate, that's something to think through. Or even if you have like family wealth that you're preparing to potentially inherit
Yeah.
while you're abroad, I think that's another reason to call. So it doesn't necessarily have to just be, don't call Aditi until you have $5 million. It's like, think about it, are you earning $1 million a year, but you don't have $1 million in assets? Yeah, because we see clients like that all the time, right? Those high income earners where they have the equity compensation that we have to think about across borders, all of those types of things, still a reason to call. And maybe it's not ongoing financial planning engagement. Maybe it's a limited engagement to just do a quick check-in. What are the tax implications of moving across this border?
Yeah.
And have I truly optimized it? Or am I missing something? Because if you have $1 million investment management account, you could have $100 to $300,000 or more of capital gains tax exposure. And so it's definitely worth to pay, $10,000 to do a full review or whatever to think through, have I really optimized this?
100%. I think the threshold that I was referring to is more on when do you feel like you should leave your assets in Canada?
Okay. Yeah.
If you have a large amount of assets, and you may not be able to transfer it all to the US easily.
hmm
So that's a threshold. But in terms of evaluating what is the easiest way for you to get down, I think you absolutely want to consult somebody more for the efficiency. And this was my landmine. I did not consult a cross-border accountant early enough in my process. And I wish I had. I was working with somebody that understood the tax treaty better, so that I think I would have saved myself a lot of headache. So I agree with you. Even if you're moving with little assets, you should still consider talking to somebody to make sure you're not leaving something behind that's not going to cost you an extra form with your
hmm
tax
Yep.
filing in the year that you're starting to do this.
Absolutely. Okay, landmine number 2, retirement accounts. What are some of the common mistakes that you're seeing for people who are moving between Canada and the US? I think we have more Americans in Canada than in any other country. So I'm assuming we have a really good treaty with Canada. So what happens with retirement accounts?
So retirement accounts are you just leave them, you stop contributing to them, leave them as is, let them grow into the future. But there's one type of account in Canada, it's called a tax-free savings account, the TFSA. This one, it's ideal you close before you move to the US. The reason you do this is because it doesn't give you the same benefits in the US as it did in Canada. So a tax-free savings account almost works like a Roth, where you put in money, it grows tax-free. When you withdraw from it, it grows tax-free. Except for the TFSA, you don't have to wait till retirement. You can withdraw from it at any time. So
Oh,
it's kind
interesting.
of a more flexible Roth. But the problem with the TFSA is it's treated as a trust in the US. So the tax reporting becomes a headache. So for most people that are moving, we want to close down your TFSA account before you move. You don't want to hold on to it. It's more work to do so.
And I think it's also, I just want to quickly point out, and correct me if I'm wrong, you cannot take money from your retirement account in Canada and move that into a US retirement account. Because I
No.
always get that question from people. And it's important to just remember there are 2 different countries, 2 different retirement plans. You cannot combine those plans, but like you said, for a lot of those standardized plans, you can leave that in the country. And the same with the US one. You would leave that one in the US and you're not combining those plans. Same with the Social Security as well. You're not combining plans. You might get credits from both countries, but they're still separate.
Yeah.
Landmine number 3, Canadian property ownership.
Yeah, this one's complicated because Canada doesn't have a citizen-based tax system like the US does. So once you leave Canada, you can become a non-resident of Canada. But if you are leaving back property in Canada, the CRA, which is the Canada Revenue Agency, just wants to make sure that you are going to file your taxes for the income that you're earning on your real estate properties if you rented it out, for example. And if you do rent it out, they want you to withhold 25% of your rental revenue, not your income, your revenue, and remit it to the CRA. So this could become kind of a headache for, from a cash flow perspective, administrative perspective. So there's a couple of forms and some elections you need to make to ensure that you file a form. It's called the NRs. And you let the government know what your estimated income is going to be. And you're exempt from then sending 25% of your revenue. You could send 25% of your income, which is better. And then at the end of the year, you go through you consolidate, you understand, you analyze how much you've earned, and you pay your taxes based on that. So the home ownership piece financially is not a big hit because you will pay something, you'll get it back at the end of the year. It's just an administrative headache. So you just want to make sure you're talking to your cross-border accountant of having the right elections filed before you move.
Yeah, super, super important because yes, gross revenue versus net revenue, those numbers can be very, very different. And I could see that being a huge, huge hassle on a cash flow if you tie up 25%, even if you're just basically breaking even on a rental property. Landmine number 4, ignoring currency.
Yeah, we started the conversation with
Yep.
this. The rates move. And they move frequently. You just want to ensure that if you're moving large sums of money, you probably don't want to use your bank unless you have a relationship with them. If you have a private bank relationship with your bank, they will help you get to a close to spot exchange rate. Otherwise, you're just paying a lot in fees and exchange rate commissions. So it's easier to partner with Wise is really good for small transfers across the border. I have a couple of firms that I work with that allow us to hedge and lock in a price for FX transfers. And then that is good for you too. You know exactly how much you're going to pay. They let you know when the rate is ideal for you. But you just want to bake that into your costs of living and transfer is the currency movement and planning because it moves a lot.
Absolutely. Okay, final landmine number 5, not hiring a cross-border accountant.
Yeah, we talked about this as well already. This came to me again. This was something I learned over time. At least the first year that you're moving and the first couple of years until you have relieved yourself of all your ties of Canada, you really want to engage with a cross-border accountant. And if you're going to continue to keep the real estate property, or if you're inheriting property, like that's another great flag to make sure you engage a good cross-border accountant, because now you're going to have obligations in Canada. So when you're transitioning, if you're inheriting, or if you're moving from US to Canada, you also want to do the same thing because there is similar landmines going the other side of the border, like going reverse, going from Canada to the US, which I believe is also happening a bunch right now.
Yeah, with the accountant, what do you have some tips for helping people find a good accountant in cross-border US for this we're talking about tax preparation.
Yeah, for tax prep. I think when you go online and if you are moving with your company, you can negotiate with your firm to allow you to use an EY or Deloitte, one of the larger firms to help you. Just depends on how complex your situation is. If you don't have that opportunity, then, there is Google searches, and a lot of these cross-border accountants put out a lot of good content on the website. They have YouTube videos about how they manage transfers, what are the forms. So look for the cross-border accountants that are doing a good job educating you online or have enough material out there. And then make sure you understand them. And you guys are, you and the accountant are speaking the same language, and that they're able to simplify some of the complexity for you. And just like any other provider that you would hire, just make sure they're on top of things and they're not dealing with too many files and you're lost in their case files. That happens. You don't want that. You want someone that's really paying attention to your situation.
Yeah, I think those are great starting points. A couple of things that I want to just share from what I've learned in helping identify good cross-border accountants is don't be scared to interview at least 3. Take your time, and the best time to find a good accountant is outside of busy season. So does Canada have like the similar tax filing deadlines as we have in the US?
Yeah, so Canada, the US is April 15th. Canada is just 15 days after that, April 30th.
The 30th. Okay. Yeah. So a great time to start interviewing for accountants is what we're talking about this in December.
I know.
This is probably going to go live in February. So I would say by February, you should definitely be interviewing. Don't call someone on April 1st to interview them. They're busy, they don't have time, and they don't want to talk to you. I also loved your tip about look for the educators, and look for the educators specific to the countries that you are living in. So there are a lot of really big firms that we do international. International is great. There's a lot of countries to specialize in. I always like to go one step more and look for who is really talking about and educating you on US Canada issues, tax issues. So again, look for 3 firms, see what those firms are, confirm what their prices or their price ranges would be. Don't be scared to give them, the prior year return so they have a really good idea of what your situation actually looks like so they can give you a good quote. So there's no major surprises at the end. Okay, Aditi, I know we're like over time, so I want to ask our final question. If you could give one piece of advice for someone who's just beginning their US-Canada cross-border journey, what would it be?
It would be to talk to people that have done it before, or get a referral to talk to a cross-border financial planner. If you're going to DIY, then research and talk to as many people as you can. If you don't want to DIY and you want to outsource it, hire a cross-border financial planner that's going to help you navigate all the questions you need to ask before moving.
Yeah, I think that's a great point. And you mentioned in the beginning, like you guys found your community of, US Canadian families living in Chicago. And I think that's always like the point that hits home in every single episode that we do on Passport to Wealth is finding your community. And sometimes that's just other people who have shared lived experiences. And sometimes it's that community of people who can provide you with elevated support, right? Financial planning, tax support, relocation, real estate, language. There's so many considerations. Aditi, thank you so much for joining us today. It was such a pleasure. We'll have to have you back on to discuss more US Canadian issues.
Thank you, Arielle. Thank you for having me.
The content shared in this podcast is intended for informational and entertainment purposes only and should not be considered financial, tax, or legal advice. We encourage you to consult with a qualified financial advisor, tax professional, or other licensed expert before making any decisions based on the topics discussed. Everyone's financial situation is unique, and personalized guidance from a trusted professional is the best way to ensure your choices align with your individual goals and circumstances.